Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Ryan Green, Index Research Analyst at Nasdaq, to discuss Nasdaq US SMID Cap Rising Dividend Achievers Index, how it's broken down, how it's performing relative to peer indexes, and just what the payouts look like and those dividends. Ryan, it's great to have you with us. Welcome to Trade Talks.
Yeah, it's great to be here, Jill. So before we go in, I just wanted to quickly give a summary of NQDB SMR. So it rebalances once a year. It pulls, basically every 3 and 5 years, it needs to have a lower dividend than it does currently in this year. So that's a summary of it.
Okay, well, let's take a look at a couple of your charts here. Let's kick it off with the first one. Give us a breakdown of the industries that comprise this index. How weighted is it to certain industries and not to others?
Yeah, exactly. So what's really interesting here is it's very heavily weighted towards financials. It's a small mid-cap index. So based on all of that, you would expect it to have not had a great year in 2023. However, if you look at its actual performance, it's up it's up 11.68% over the past year. And I'd love to talk a bit about why that's the case.
And if we take a look at the next chart here, how has it performed relative to the Russell 2000, the equal weight index?
Yeah, so if we look at the Russell 2000, the Russell 2000 is equal weighted, so it's even more tilted towards small caps, similar to the Rising Dividend Achievers, which is also equal weighted. So here we've compared it to the Russell equal weight. As you can see, it behaved fairly similarly to the Russell up until around 2 to 3 years ago, and then it started to diverge a bit. This is right around the time that we began hiking rates, and we believe that this is a large aspect of why we've seen this outperformance relative to other small cap stocks or other small cap indexes.
And Ryan, if we take a look at the next couple of charts here, everyone wants to know, of course, how that dividend and yield performance has been with this particular index.
Yeah, exactly. So we've seen really great dividend yield with the Nasdaq high yield or Nasdaq NQDB SMR. If we compare it to its parent universes, NQUSS and NQUSM, we see that it's consistently, since the point of launch, had a 12-month trailing dividend that has been consistently above both of its parent universes, showing that it has done its job with maintaining high dividends relative to the base universe. I'm sorry, go ahead. If we go to the next slide, what we can see here is part of the reason that it's so important to have a small mid cap is, so what this chart is showing is it's showing the dividend yield by sector, and then it's also showing market caps. The larger the dot, the larger the market cap. And as we can see, a lot of the kind of smaller market caps are some of the higher yielding dividends in NQDB SMR. So it's important to really make sure that we have a small mid-cap index for that, because otherwise, especially if it wasn't equal weighted, those securities just would not show up in this index.
And Ryan, to wrap it up here, let's take a look in the different indexes to see how they compare, whether it's large, medium, or small.
Yeah, so what's interesting here is we're really looking at the difference between these indexes. And over the past year, similarly to how we've seen the divergence with NQDB SMR, we've seen a divergence between large cap and small and mid cap. So there are some murmurings of Fed fund rates pausing or even going, or the Fed pausing or even going lower in the next cycle. This seems to be positive for small and mid cap, but it's important to recognize that even though in the greater scheme of things, we are seeing either a pause or a drop potentially, in the longer term, these rates are still significantly higher than the rates we're seeing in 2020 and in the past. Small and mid cap might not have done well since the rate cut, and will have not done well since they had to hike in 2022 and will likely have to refinance their debt. This debt will be refinanced at higher levels. And what's really nice about having a high dividend index is with a high dividend, you tend to have lower debt. And that complements each other very nicely. So we're going to potentially see small cap do well, and because of the low debt ratio of a lot of these constituents within the index, we will see even better performance potentially from NQDB SMR.
All right, Ryan, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much for having me.